Hola mi gente, welcome back to the channel. My name is Sean and this is We Are Investing. On today's video, we are going to be discussing SoFi stock. There are some things we need to clear up regarding this company and this stock. The two main things are the Super Bowl and the banking charter. We're going to dive into more detail in this video. Before we do that, please consider hitting that subscribe button, ringing that bell, and smashing that like button. Now let's get into the information. The first thing regarding the Super Bowl. And before we dive into this information, does it matter? Does it really matter for SoFi as a business if the Super Bowl occurs in Los Angeles or not? Is it really important to the underlying business and the performance of this company? Or is it just a nice marketing event that might create some buzz, but nothing really dramatic? My personal opinion on whether SoFi Stadium is the location of the Super Bowl is that I have no opinion. I don't care. It doesn't matter for the business. I'm not really paying attention to this because I don't think it really matters. But anyways, there are rumors right now that SoFi Stadium might not be the location of the Super Bowl because of mandates from Los Angeles. However, the mayor came out and said they are confident that it is going to be in Los Angeles. So maybe it is, maybe it isn't. My personal opinion is that they're not going to change the venue location. And come February, I think we are going to be over the curve and this variant is going to be less and less of a focus and we are going to get back to living our lives like we should. Next up, we got to go over the banking charter. Now, there was relevant news that we are going to dive into. This news is a little bit comprehensive. I am going to have to go on over to the computer to show you the article to try to better explain it. But before we do that, is the banking charter actually really important for the business? It is, in my personal opinion. Although the business without the banking charter will still be successful, I think a banking charter can make a huge impact in the underlying business. It can help increase the bottom line of the company, make it more profitable. If you take a look at their investor presentation, they gave you a slide that goes over adjusted EBITDA with a banking charter versus a non-banking charter and the impacts a banking charter can have in adjusted EBITDA. If you take a look at 2023, it can increase adjusted EBITDA by 48%. Up 234 million, an additional 234 million without the banking charter. Adjusted EBITDA for 2023 estimates come in at 484 million US dollars. So that is a huge difference in margins, and it could be very important for the business as an investor to get the banking charter. So this is something that I do think has actual impacts on the business. Although I am invested in this company, assuming they're not going to get their banking charter, and if they do, that will be an additional bonus. How I'm really playing SoFi is I'm considering the margins as they are right now, and I am assuming that they're going to see around 50% growth in revenue for 2022, putting them at $1.5 billion. They beat estimates this year. They're going to come in over $1 billion. And I do think since they beat in 2021 and the company actually is doing what they said they were going to do when they came out with this investor presentation a year ago, gives me belief that they are going to hit their target at 1.5 billion. Now they could miss, they could come in at around 40%, or there could be a beat to the upside and come in around 60%. Depends on what happens with student loans. That's also something that I think is important for this business, and we are going to keep an eye on that as well. But right now, come May 1st, student loan repayments are going to start, and we could see a lot of refinancing in student loans. So now let's go over that important news regarding the banking charter. Let's head on over to the computer. Let's do it. All right, so there's an article from Yahoo Finance that was posted today at around 3:47 p.m. The title of this article is Drama at Top Banking Regulator Puts Pressure on Bank Mergers. What's happening right now is SoFi is merging with a company that could give them the banking charter that they want. Now, if we take a look at this, on New Year's Eve, FDIC Chairman Jelena McWilliams abruptly announced she would be resigning from her role effective February 4th. The move leaves only Democrat-appointed officials on the FDIC board. There are two other major bank regulators, the Comptroller of the Currency and the Federal Reserve's Vice Chairman of Supervision. And an analyst from Raymond James, Ed Mills, stated the following: "We expect near-term pressure on financials on the accelerating regulatory shift, particularly for banks with pending deals that would form a combined entity with assets over $100 billion. in addition to freezing any possible merger discussions. In turn, the turn in regulatory winds calls attention to a number of previously announced deals of significant scale. Now, on the flip side, an analyst at BTIG acknowledged the soap opera at the FDIC, but noted that he would not expect the regulators to start swatting down any and all deals. And this is very important. We continue to believe that there will be M&A headwinds for banks, which will extend approval timelines. But our sense is that deals with pro forma assets near or either near or below $100 billion should have a clearer path to approval, all else being equal. Now, I'm going to be completely honest with you, and probably everyone who's talking about this on YouTube or wherever, we do not really know what's going to happen. We're not an expert when it comes to bank mergers and the approval process. We're just sitting here reading these news articles, hoping for the best. That's really what's happening. But if you are going to do some due diligence and you are going to look at this article and go off of the words of the analyst, $100 billion in assets seems to be the benchmark. If it's below $100 billion, it seems to have a clearer path to approval. At least that's what they're telling us. And I mean, if you take a look at SoFi, SoFi is currently sitting at $8 billion in total assets. So I highly doubt following this merger, they're going to be over or around $100 billion. If you take a look at their balance sheet and you see their total loans, that comes in at around $4.8, $4.9 billion. Their total assets, again, $8 billion. The information on WEBULL is confirmed by the investor presentation of SoFi for the last quarter. So I don't know what's going to happen with the banking charter. Nobody really does. But when I read this article, it doesn't scare me really because of the size of this merger. And I still think there is a good chance that SoFi actually gets the banking charter approved. Let me know in the comment section down below if you're buying SoFi right now at these current prices. I would love to hear your input and if you're invested or trading this company. Let me know in the comment section down below. It also helps drive engagement and helps get this video out to more people because it is a YouTube metric and it helps support the channel. So your comments are well appreciated. Also, if you want to get 2 free stocks worth up to $2,300, you can do so by joining WEBULL via the promotional link that I have down below via my partnership with WEBULL. It's a great brokerage. I highly recommend it. Also, if you want to help support the channel, you can join the Patreon for $5 a month. It will give you access to a private Discord server. It will give you access to valuation spreadsheets, and it will let you know what stocks I am buying and selling. But that wraps it up for today's video. I thank you so much for your time. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.